You need to understand these 4 different trading tools if you are a beginner. If you want to go from being a beginner to being a profitable day trader, only understanding these 4 different tools will boost your trading career, and after that you will be able to make money in the financial markets. You will be able to understand the markets. So these are the 4 things in technical analysis that are crucially important to understand, and once you understand and master them, you will not need to know all the other nonsense in technical analysis. Focus on only these 4 things, and then you will definitely be able to make money in the financial markets. Understanding these 4 different tools is completely enough for you to become a successful day trader. Of course, it's not enough to only know the technical analysis, but if you want to be able to read the markets, if you want to be able to make money from the markets, you only need to understand these 4 different tools in technical analysis. And the first tool is support and resistance levels. There are different kinds of support and resistance levels and different names for it. Some traders call it supply and demand, some traders call it just support and resistance, some call it key market levels. It doesn't matter how you are calling it, it all means the same thing. And support and resistance are like the fundamental blocks of technical analysis. So before anything, any new trader learns support and resistance levels because they are powerful. They work in the markets like magic, and they are really important for you to understand. So let's talk about support and resistance levels. First of all, you need to understand that support and resistance levels happens all over the place. So they are basically everywhere. So for example, over here, if we look, currently I'm on the Bitcoin chart. Let's see what the Bitcoin is doing. For example, over here, I can mark a support level over here, and we can see that this support level works perfectly. And these levels, what is really important for you to understand, that these levels works in all markets. They work in a stock market, in a crypto market, in a forex market. In some markets they work a little bit better, but in general everywhere is the same. For example, look over here, we have a support level, and look at the amount of opportunities it gives us to trade. We have one opportunity to open buy position, we have another opportunity to open a buy position, we have a third opportunity, fourth opportunity, and fifth opportunity to open a buy position, all from a single support level. Now, another thing that is really important to understand is if you have only one touch like this to a level, it doesn't mean that a level is here, because it doesn't prove that there is a level. But if you have a 2 touches or 3 touches, then you definitely have a level and you can trust it. I usually stick with 2 touches. So for example, if I draw the level like this, for example, doesn't matter where do I draw it. Imagine I draw a level over here. First of all, we had a touch over here, and then we have another touch. So at another touch, at the second touch, the level is confirmed. And as you can see, if I would have opened a buy position like this, I would have made great profits. So if you're trying to figure out whether there is a level, look at the touches, and if there are more than one touch, then there is a level, because the price is not just magically reversing on the same level, on the same price. It reverses because there is either a support or resistance level. Third thing that is really important to understand is that a lot of people think that there is either support or resistance. Support pushes the price from the bottom to top, and resistance pushes the price from top to bottom. But this is not really accurate, and this may be a little bit misleading. So we do not only have either support or resistance level, but we have just a level in the markets, and that level works always not only as either support or resistance, but as both. At first it was a resistance, so the market was moving upwards, and then it was resisted. And I can even extend this level. We can see that it started way over here. We had resistance, resistance. This is the false break pattern, but again, this is a resistance, 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 and so on. And then what happens when the price finally breaks this level? Then it becomes a support level. I mean, look at this. Again, from resistance to support. And this proves my point, and anywhere in the chart you can find the same thing. Basically, anywhere in the charts you will see that all levels work as both support and resistance. So another tool that we have talked about as being really important is market structure. So market structure, I can talk about it for hours, and there are so many things that you need to know, but the general concept is basically the market moves only in two ways, or excuse me, in three ways. So if we have an upwards moving market, then usually the price does something like this. So first of all, we always have an impulse, and then we have a retracement. We have an impulse, we have a retracement, we have impulse, we have retracement. And this happens because the market, any market cannot just keep going upwards the whole time. It has to retrace, it has to do a correction. So if it is a market structure going upwards, it cannot only just go upwards forever. This never happens, and this is why we have this kind of market structure. If the market is moving downwards, same thing, it cannot just drop for a long period of time. It has to do some sort of correction. So if you have an impulse, you have retracement, impulse, retracement, impulse, retracement. So if you understand this, you already have an advantage in the markets because you understand how the market moves. You are not opening wrong positions. And just let's quickly look how it looks in action. And how does it work? So for example, over here, if we look right here, we have the same thing is everywhere. We have impulse, then we have retracement. Impulse, retracement, impulse, and then the switch of the trend. And now imagine, now that we understand it, we can combine it with, for example, support and resistance levels, and then they provide us with easy opportunities to open the trades and to make money in the financial markets. And it's really important because a lot of people, they think that the market is only either going upwards or downwards, but in general it's making impulses and retracements, and when you understand it, it becomes much easier to trade. And look, for example, over here, it didn't go upwards, it made a retracement, then again impulse, retracement, impulse, retracement. So in order to understand candlesticks, again, each of these topics are broad. It's not enough to only discuss it for a few minutes and understand it, but in general you can start studying about them. And what you need to understand about candlesticks is the anatomy. So the candlestick usually consists of a body and a wick, and these wicks basically tells you about the momentum. So if, for example, you have dojis, so dojis is like when you have a small body. Let's zoom in a little bit. So if you have a small candlestick body and you have long wicks, then you have a doji, and this means indecisiveness. So here, for example, we know for sure that the market will switch and basically reverse. And that's why it's important to read it. And for example, over here where you have longer bodies, that means that the momentum is high and it is strong and strong impulse of the price. So that means that the price will most likely not stop and not reverse anytime soon. But then when it starts showing indecisiveness, then we know that the reversal will happen. And there are also different candlestick patterns that are useful to know. Do not only trade with only these patterns, but it is really useful to understand them. And the last thing really important is understanding trading patterns. I already mentioned the main patterns. So for example, here we have an example of an ascending triangle. And again, as you can see, the market respects it perfectly. Especially I noticed the crypto market respects these patterns. So it is really important for you to understand it if you want to be a successful day trader. And look at the precisiveness. Here we could have opened a buy position at the bottom. At the top we could have opened a sell position, and we could have been right by opening these positions, because look at the accuracy of this. If you are able to draw this pattern correctly, I mean, you are able to make a lot of money from a single pattern. So this is a ascending triangle. We also have a descending triangle which looks something like this. So we have a, for example, support level, and then the market is going downwards like this, and we have a downwards moving trend line, and the market is usually trapped between this descending triangle, and then it breaks out. The breakout also provides us with great opportunities. So this is how these trading patterns works. Again, there are so many of them, but I already mentioned my favorites, and it's really important for you to understand them. So if you guys enjoyed this episode, leave that like button, subscribe, and see you in other videos.